DraftKings has been one of the craziest stocks over the past year. In this video, we're going to go over whether DraftKings is currently set to be one of the craziest and best opportunities in the stock market going forward, or if it's going to be a flop. In this video, not only are we going to talk about the good with DraftKings earnings, but also the bad and just important things you need to know going forward with this one. DraftKings is a stock I've been following for a very long time. It has all-time highs around $74 a share. Now it's all the way down to $13. It's been a brutal year not only for DraftKings, but basically every single other stock in the stock market this year. But what was weird about this DraftKings movement recently is they just reported earnings on Friday, which is normal, but the stock tanked, but it's kind of a weird situation. So essentially what happened is DraftKings increased their revenue, for the quarter three, basically 136% year over year, which is unheard of in this economic environment, you can say. For this quarter, they reported revenue of $502 million. In the same quarter last year, the revenue was $212 million. That's a 136% increase. Like I said, that's unheard of in this economic environment. On top of that, they beat EPS expectations, and they also beat revenue expectations, which historically are very bullish things to see on an earnings report. They also narrowed their loss more than expected, and they raised their revenue guidance, yet the stock tanked. Why? Why did this happen? So while there's a lot of great things going on with DraftKings right now, like the things I just mentioned, there are some important risk factors to keep in mind going forward. Now, looking a little bit deeper into this earnings report, a key metric used to analyze DraftKings is what are called MUPs. MUPs are monthly unique players. Basically, it's just a unique player who spends money on DraftKings each month. In the same time period last year, so the 3 months ended September 30th, and so last year, for 2021, that was at 1.3 million MUPs. In 2022, it was 1.6 million MUPs. That's an awesome increase. It's growing quite a bit. That's awesome. But a big downside of this past earnings release is that the growth rate is slowing. So DraftKings is still growing their MUPs, but it's just not as much as everyone was expecting for that specifically. While that is a downside, one, it's still growing by a very good amount, but also two, even though that their MUPs growth rate is slowing, the average revenue per MUP is straight up exploding. In 2021, the average revenue per MUP was $47, right? In 2022, it was $100. So it's like, that is an insane increase. But of course, sometimes the stock market is irrational, but there's also more important things we have to talk about and on the negative side of DraftKings related to this report. Another important thing is that while DraftKings has $1.4 billion in cash, they also are burning their cash somewhat quickly. They are still spending a ton of money, and they're not profitable. It is very common to see growth companies not profitable in their beginning phases. I mean, hell, even Uber's still not profitable, and they are currently trading at a valuation of $57 billion, and they're still losing money every year. So it's like certain companies take time to become profitable depending on the industry they're in and the strategy that they're deploying to become a dominant player in their industry. DraftKings is still not profitable, but like I said, this is common for growth companies. Tesla wasn't profitable for years, and they ended up doing just fine. But I know that's kind of a flawed argument, but the main point is that when you're in the beginning growth phase, you don't always start out as a profitable company. Looking at DraftKings in their cash situation, investors are getting a little bit, tired of the lack of profitability. They want to see profit sooner, and DraftKings is burning cash in the meantime, obviously, until they become profitable. They have $1.4 billion in cash right now, and investors want to see that profitability happen sooner rather than later. Right now, there's a lot of expectations for profitability to occur in 2024, but it can happen sooner or later depending on what happens with the economy overall and what happens with states legalizing sports betting. each state is expected to become profitable within 1 to 2 years of the initial launch. We'll talk more about this in just a couple minutes, but that's the important thing you need to know with DraftKings cash burn situation. Another important thing to know is that stock-based compensation has also been a pretty big drag on DraftKings overall. A lot of times what growth companies do in the beginning is, instead of paying their not all employees are like this, but a lot of times companies pay their workers through the form of stock rather than just dollars. A lot of times it's a mix of both, but the main thing is that a lot of times companies pay their employees through the form of stock as compensation, and that stock-based compensation has been pretty high for DraftKings, and it's just been a pretty big drag on the company. We can see the stock-based compensation for this most recent quarter is $126 million, which, while it is decreasing relative to other quarters, it is still high, and we want to see that lower. So those are like the main risk factors with DraftKings. They're burning cash pretty quickly. Their stock-based compensation is still high, but at the same time, their revenue is exploding, and arguably they're just in the beginning stages of their total growth opportunity, you can say. Now, looking more at DraftKings, like I said, with the states and potential opportunity going forward, there is a lot on the table. So basically looking at the map right here, we can see DraftKings has mobile sports betting in 18 states, which represents 37% of the U.S. population. That's nothing. That is nothing. DraftKings is literally just in the beginning stages, especially in terms of just legalization itself, let alone market share and just, as the betting industry grows, there's a ton of opportunity for growth no matter which way you look at it for DraftKings and the sports betting industry as a whole. Gambling has been around forever, and it's not going away anytime soon. Another important thing to know is that the federal ban on online sports betting was just lifted a couple years ago, like in 2018. It is just beginning stages for the online sports betting industry as a whole. Another important thing for DraftKings is that Disney, yes, the powerhouse Disney, actually owns around a 5% stake in DraftKings, and Disney owns ESPN, for those of you who don't know, and Disney slash ESPN and DraftKings are all working together to hopefully put a deal together that would partner ESPN and DraftKings. That would be a giant deal for DraftKings. Hopefully they get it. Disney owns some of DraftKings, so it's kind of looking like it. This deal has been in the works for months now. It has not been finalized, but so far it's looking pretty good. Any sort of deal with ESPN could be huge for DraftKings, so obviously that's giant, and it's nice to see Disney with their ownership stake. Another important thing to keep in mind going forward is that growth companies, especially in their beginning stages, it's not all sunshine and rainbows. It's not like, oh yes, I'm in a great industry, I have a lot of potential for growth, I'm growing a lot, magically the stock goes up. That's not how it works. You could look at any powerhouse company that you see in the market today, and it was a long and brutal journey to get to that point. Amazon, the powerhouse company that we all know, that's currently trading for $92, and that was trading for highs of $187, like a year ago. They had a brutal ride to get to the position that they are in today. If we look back to the early 2000s, we can see Amazon had a high of $5.65 per share, and it went all the way down to 28 cents per share. They lost 95% of their value before ending up growing, like in terms of stock price. Sometimes the market does crazy things, and just overall in terms of any company's growth, there's volatility and craziness along the way. This is the same for any and every company out there, and honestly, that's just how life works. There's a lot of bumps along the way, especially for high growth companies like DraftKings. So, it's not all sunshine and rainbows, especially in the stock market for growth companies. That's very important to keep in mind. Another important thing to keep in mind is I know a lot of you have been more interested in the stock market since 2020, but Tesla is actually a prime example of how quick the crowd can shift. I've seen a good amount of people in the stock market who, let's say in 2020 and 2021, and yeah, like even like late 2021, where people were just saying the stock market's going to do nothing but go straight up and up and up forever, right? And it just seemed like the greed would never end. And now that the stock market is pulling back, you have a lot of people saying we're going to see the craziest crash since the Great Depression. It's like the crowd's sentiment shifts quite a bit. And with Tesla specifically, Tesla was pretty hated on before 2020. It was a very wild moving stock, and a lot of people thought that Tesla wouldn't make it. But then once Tesla actually started to follow the plan they originally laid out and the company growed, everyone magically became a fan of Tesla overnight, basically, with 2020. I've been seeing a lot of people be somewhat bearish on DraftKings lately, but it goes to show you how quickly the crowd sentiment can change. For me, DraftKings is a stock that I own, I will continue to buy, and I plan to hold it for a very, very long time. I think in many different ways, DraftKings has a ton of potential for growth. Even if we look at this most recent quarter, what other companies is growing their revenue like DraftKings is right now, especially in this market environment? And I know revenue is not everything, but when you go from $212 million in revenue to $502 million in revenue quarter over quarter or year over year, but in the same quarter, that is insane. And then quarter 4 of 2022 has revenue expected to be $800 million. Like I said, I know revenue is not everything, but that type of growth is insane. And I understand that, they're still not profitable yet, but you can make the same argument for Amazon or any of these other powerhouse companies when they were in their growth stages. Of course, there are some risk factors with DraftKings, like there is for any and every other investment in stock out there. But for me, this is a risk worth taking. I think their growth rate is insane. And another important thing to look at right now, or I also believe their valuation is at a good point, but another important thing to keep in mind that I saw very interesting is actually on their income statement for this most recent quarter. In Q3 of 2021, their marketing expenses were $303 million and their total revenue was $213 million, right? So $303 million in marketing, $213 million in revenue. For this quarter, their marketing was $321 million, yet their revenue was $502 million. So their marketing was more or less the same amount as last year, yet their revenue increased 136%. And I only expect this sort of efficiency going forward. So that's awesome to see. Like I said, the stock-based compensation and the cash burn is a risk, but when you look at the grand scheme of things, I think there is a lot of potential for DraftKings going forward. Like I said, they also have that potential deal with ESPN, but they're also working with Amazon with Thursday Night Football, basically, as the pregame odds provider and as a sponsor of Thursday Night Football on Prime Video. Again, they're just really getting out there. I'm sure you've seen the DraftKings ads everywhere. In my opinion, they have so much potential for growth, but it won't be a nice, slow and steady, sunshine and rainbows style ride. There will be volatility to the upside and the downside with this one, like most other growth stocks. If you don't think you can handle that volatility, then perhaps investing in lower volatility stocks would be better, or even bonds. But even this year for bonds has been one of the most historic and brutal years for the bond market. So the whole market's been crazy this year. At the end of the day, I love DraftKings. I will continue to buy it up. I think it's worth the risk, and I'm very excited going forward with this company. In my opinion, they have a ton of potential for growth, and I'm very excited. Let me know what your guys' thoughts are on DraftKings and just the market overall. And besides that, thank you guys so much for watching.